when the rich people just come together and be like, okay, it's time to hit the sell button, right? And then they have to have a reason for it. And then the financial system is so complex that it's not until like it's like a domino effect. And if you think about it, it's like a big domino starts to knock down smaller dominoes until you hit like the average folks who basically get fired from their jobs because the stock prices are falling, right?
Yeah. Cool. Excited to get into it. Welcome to the show, everybody. This is the KOL Bear Report with myself, Zoo Crypto, and we have RomReactor here. Remember, nothing here is financial advice. We're not financial advisors, so please exercise your own risk tolerance. We are just some guys on the internet. How's it going today, RomReactor?
Good, good. Beautiful day. I thought it was supposed to be cloudy, but it's a sunny day here in New York. Saw a funny post today on SPARTA, since SPARTA was like a project that I was involved in heavily. Now it looks like it's going to like, how you say, in a nice way, going to the down below. But there was a kid over there who posted, he's like, hey, I got into this project because Ivan on Tech recommended it a year, like in 2023. But then he was like, nah, I don't even know why he recommended this. He was saying, so it's a nice topic would be like exactly what you said. We're not financial advisors, right? So we should start that off where, we're looking at the market as is. Markets go through euphoria, they go through fear, pain, and something like SpartaDex, it had its moment where it went through really nice euphoria. It made a lot of people money. So did GSWIFT. I even caught that coin during that time because he follows the trends heavily. He wants to make entertaining content, right? He's not gonna show you coins that are going to zero all the time. It's just nobody's gonna watch that. So at that time, SPARTA was doing very well. GSWIFT was doing very well. A lot of the Polish projects were doing very well. Then, once 2024 unrolled, we kind of went into this intermittent bear market where we were going sideways on Bitcoin for a while. And the alts really never recovered since then. I mean, they had their moment in December when Trump came into office for a little bit. But then afterwards, we're back into bleeding tires. So here we are. We're here in 2025, technically the last year of the bull cycle, but yet we have all the altcoins are in bear market territory. I mean, what can you ask for? When can you ask for such any better deal if there is any, right?
Mm-hmm.
So, but of course there's risk. There's a reason why all the altcoins are in bear market territory. Nobody's touching them. Nobody wants them. So here, this is where we're going to be looking. Yeah. So it's not even that. It's like Bitcoin is also pretty close to its bear market targets. Me and Matthew were even talking. I don't know if he's in the stream today, but a 65K Bitcoin is basically the lows is a bear market low, and we're like only 20% away from that. So if you think about it, even for Bitcoin in a bull cycle, we're almost at a bear market target. Pretty close, like
65K.
Yeah, that would be like a bear market target. Like if there was ever a bear market low, and we could look at my production cost to see. But I believe like last bear, 15K was around 15K was production cost, if I'm not mistaken. But I could open it up. Let me just get that ready. 1 second.
Yeah, because apparently the price has never gone below the price of Bitcoin on the election day, and that this time that was like 69K. So that should be the hard floor as a rule, right? But rules can be broken, of course.
That's pretty close to production cost too. Yeah, exactly.
Yeah.
Rules can be broken. There could be wicks and fear and panic, but they usually don't last long. Maybe like a couple weeks to a month, if it really gets that low.
Do you think we could wick down even to 65 potentially?
Oh yeah, if there's like fear, I don't know, like World War III, Russia bombs Ukraine again or something,
All of a sudden, like an inverse cup and handle here. Look at this.
Yeah, I did mention that there's an inverse, not a cup and maybe head and shoulders is what you're saying.
Maybe, yeah.
Sorry, I'm just logging into my TradingView.
It's a pretty weak shoulder here, though. We would need a stronger shoulder on the right side.
Yeah, it looks a little bit weak there. I remember.
Inverse cup and handle.
Yeah, but we are pumping today, so we kind of look like we are trying to do that head and shoulders, the inverse
Yeah.
head and shoulders?
A little pump today, but still lots of resistance.
Yeah, we're still waiting for that Trump Liberation Day. He's doing a speech in a couple hours. So we could definitely do a follow-up stream afterwards, or maybe Friday after the market takes in all that news. Usually there's like I call it a day delay, because I remember in 2020, every time Jerome Powell would open his mouth, there would be there would be a pump, because it's the whatever news already came out, and people are already just like, okay, that's it, no more bad news. But then people process this what actually he said. So on the following Friday, the market would crash, because it would be there would be a delay of processing the news. It's pretty funny.
Yeah.
Okay, so I got my TradingView open now. How do I get these charts? There we go. Boom, Bitcoin 86K. It dipped a little bit down. Again, I got my production cost indicator. I haven't updated it, but I would assume more or less the production didn't change. Because every time I have to update it, I have to request it from Cambridge University. Then they have to send me a whole Excel sheet from data since 2008. And I only need the most recent data.
Yeah.
So I don't really bother them too much now. Maybe I'll do it every quarter. So it's so they don't flag me or something. Okay, cool. So let me share my screen. Present. Share screen. Share screen. Entire screen. Boom. Okay. Nice, nice. So if we go all the way back, we're gonna go to log scale. So
This is the production cost indicator.
Yep. And you can see that even in the bear market, which is right here, this is the worst things. FTX collapsing, SEC going after everybody, Coinbase going after Ripple, going after you name it, Solana, right? And this is the price that was determined on during that time, and we just touched production cost, Then of course miners started closing shop. That's why production costs fell. But during that time, the biggest bear we have witnessed so far, Bitcoin went from 70K to 15K, and technically in terms of production cost, the miners were still making money. They never lose. Miners don't lose for some reason, and it makes sense. This most likely has a lot to do with Jihan Wu, the guy who makes the Chinese Bitcoin miners. I'm sure he sells it to a bunch of millionaires, multimillionaires, probably even billionaires. These guys have shipping containers filled with Bitcoin miners, and they're mining Bitcoin every day. These guys they look at Bitcoin like it's a commodity. They produce the future currency. Basically, they're producing the future currency. They're in there for a long term. So these guys are whales. They're not like me and you buying one Bitcoin miner, slapping it in a computer in our apartment, right? These guys have full, big, large scale operations of producing, 100 Bitcoins a month, 200 Bitcoins a month, sometimes even 1,000 Bitcoin a month. So these guys don't lose, right? They're not. They have influence. They have connections with market makers, right? These are big people in the industry, and so we're not too far from that price, right? So if you think about it, during an all-time, if you look at the percentage wise, during a nice bull cycle, like last cycle, we at the peak, if you even come to this dip where miners were kind of panicking, but let's say we don't count this huge dip. Let's say this was the average price, right? 15,000. So you're looking at a 3x price, 3x price difference. We're nowhere near that. We're at a measly 20% price difference or something like that, something very small. So if you 36%. So if you had to, if we just say, on average, the bull case is sorry, I might have to be going off the chart, but let me just, okay, there's 300. So on average, let's say we do a 3x above production cost
Mhm.
on a euphoric time period, that would put Bitcoin's price at $250,000. So right now you're looking at a super cheap price of Bitcoin. Of course that's if this cycle, maybe this price won't happen this cycle. It might be next cycle. Maybe it'll be around like 2027 down the line. Who knows? But this 3x that usually happens from production costs to and it's pretty common. Like you can see these differences here, more or less. This is maybe a little bit higher. This is, usually when we have a euphoric uptrend, we don't really go above like 3x production cost. And this is just Coinbase. Let me just open you a longer term chart. Yeah, this is the longer term chart. You could see it more clearly that we don't really go above like 3x. Maybe in the prior cycles we did, but more or less, like even from the beginning, where this is 2015 cycle, let me measure it. So a good measure would be, I guess, maybe from here, 2013, and then let's just see what that is.
I'm kind of tempted to just take out a big loan and just go long Bitcoin here, but I realize there's also downside risk as well, right?
Yeah. So I guess
don't borrow to speculate. It keeps ringing in my ears,
Yeah, logarithmically, actually, it's like a huge difference. We went really above but if you look at it in terms of, I guess, it's a very big difference. But basically, we tend to go above a lot higher above production costs, like during bull cycles is the point of this short story. And at the moment, we're like right in next to production costs. So what do we do with this information? We're pretty close. Well, one, we have a pretty interesting time. We're right now in April. We're about to hit May, and the saying is usually sell in May and go away. So if that's the case, if we do have a downtrend all the way up until September, basically, then you can start DCAing easily. Like if you don't have the patience to DCA, then you wait until we touch production costs. That's my target, at least.
I've been DCAing for years now. I haven't even stopped at any point.
Yeah, which is perfect. You're buying like amazing prices, sale. You're like in terms of if we are gonna have a last year bull, which we usually do, it's amazing. And bull markets last very briefly. Like if you look at the time range, it's not like it's not like it lasts a long time. So like this biggest gain right here from October till I guess right here April, which is only 166 days, so like half a year. So within in a half a year, which is totally doable, we can have a rally. Ironically, this was October till April, right? So will we see something like that this year again, where we're going to start pumping like crazy in September, October, and then we'll actually close up the high somewhere in 2026 April? It could be, and that makes sense. We could have a slight recession of some form. The printers turn on like crazy because obviously there's a spiral effect that occurs when prices keep dropping, and the only way to stop that spiral effect is by turning on the printer. They know this. They can only delay it so much. They can only delay the spiral all the way up until enough of their clients get into the market at the prices that they want to get in. Now afterwards, it doesn't make sense because then their clients will be losing money. So they're going to need to turn on the printers.
Yeah, with Liberation Day today, a lot of uncertainty will be removed after the market. Could be really good time to go upwards actually following today, depending on how this speech goes at 3 o'clock from Trump, right?
Yeah, if you're playing it on if you're playing it on a short-term basis and you want to just make a quick buck, again, what I was just talking about was a long-term thing, where you're buying and you're holding for years. You have to have diamond hands, balls of steel.
Well, you talked about like a 6-month window with like a 3x upside, something like that, right?
Well, that was last cycle. It took like
Okay.
the whole rally was like a period of 6 months.
Yeah.
Like, so when will that crazy rally start? We kind of did see that over here, right? We saw a nice rally.
Yeah.
We went from 26K all the way to 75K.
Mhm.
That was a beautiful time to to get into alts, to buy, sell, whatever you had to do. So for all the people who made money in here, congratulations. That you guys did good, because you were most likely like, this is where Ivan started buying. I remember he started buying around like what he was really like pushing it, and everybody who was watching influencers like Ivan at that time and were not out of the market entirely, they made a good run. Obviously they want, maybe if they got greedy, that's already their fault. Like that's what happened to me, for example. I got greedy, and in here is when I started to buying really into alt, and that was the worst decision ever, apparently.
Yeah.
So don't get greedy. And when you do see runs up like this, you should start taking profits, get into stables, balance out your portfolio in a way where your risk reward ratio makes sense.
Yeah.
But yeah, so like in terms of short term, if I just zoom in, and my biggest indicator right now is on a daily, it looks pretty bullish. I mean, we're forming a hammer. We need to close above this 200 moving average, and then from there, we're going to be probably retesting these two, which you've seen. We've been retesting the 50.
Yeah, we're finding resistance at the 200 right now.
Yeah, well, actually, the biggest resistance is the 50 moving average, because that one has been really, like, as you can see, putting sell pressure. So we need to really break that. The 200 is a good support. That's what's kind of it's looking like, but it can go down south very quickly if we don't go above the 50. And then if we look at a weekly time frame, which is a little bit better, we are holding the 50, which is good. And if you really want to bullish, so this is kind of like Moralis money line flipping bullish, we would need to really break 104K, and from there you kind of have already, you'll probably have a rally, kind of like similar how we
to 150.
Yeah, exactly. Kind of how like we had over here, basically. Once we broke that bearish weekly SAR, we went from 67 to 107. $40,000 in Bitcoin was made. So once we snapped this, so that's what kind of I'm looking for. Now, of course, you could take the risk and buy here, but here you're also like 50%. We were talking about. I remember like Wizard was saying. I had a lot of people in my group chat were saying we were going to go to 30K. 40K. So of course we're still in the bull cycle here, so I was more bullish. But here we're kind of already getting like, it's already getting like late into the bull cycle, so you don't really know at this point. Like, yes, technically if the cycles repeat, we should go above 140K and probably go towards that like 250K target that I mentioned, or maybe 200K or something like that, like up there, right? But at the same time, like, it could get a lot worse. We don't know how bad these guys are going to push this recession into existence, if they will, or it looks like they kind of will, but things could get pushed to the side with cash easily. All they need to do is just turn on the printer, and they could just sideline the whole recession, basically. So we gotta look at the macro. We really gotta see what's going to be happening in the next coming months, all the way until September, to really kind of make a decisive. Along with monitoring the charts and the prices, to see if, are we still going to have that nice Q4 pump like we usually do, or is it already over? So
this tweet from Ansem here: closing positions before Orange Man talks.
Closing
20 minutes ago. Could be a dump.
He's selling the news. Buy the rumors, sell the news.
I think so. Yeah.
So
we've already had a lot of pump going into this Liberation Day, so it would make sense if we pulled back once he hits the stage, sort of thing, right?
Yeah, or like tomorrow, once they actually process the data and get the numbers, it could take like I said, it could be like a delay, or a delayed reaction to just people processing the data and figuring out, okay, like these tariffs will cost this much to the country, blah blah blah, and then and then the investors will get the data and they'll process it. But in short, in brief, sweet and short, we're still in the Q4 bull cycle. we need to really break above this star line to get a bullish, like a sentiment, a really strong bullish sentiment. If we don't, if you're just looking to trade this tariff stuff, your best bet is probably looking at like the daily or even the 4-hour chart, and from there, on the 4-hour, we're basically at resistance. So you would be technically shorting in this case.
I have a long open right now, but I have a take profit level set, so it can't go under. But wonder if I should just close it right now.
Yeah, because you could see how like the green was acting like crazy resistance every time. During this bearish week. This is for the 4-hour time frame. So so you would short now, and then once it drops down somewhere, you would long. But that's if you're a short-term trader. I don't really like to do that. So for me, I'm like a long-term trader. I would rather be patient and wait for the euphoria to hit, and then I'll just leverage. I'll take like a 2x, 5x position, and ride it up. So it's a mixed. However, your trade approach, you could have mixed. How you say a mixed positions of choices. You could either play short or you could play long. Now, the biggest indicator for the recession is the one I have here. Is the so I got to take off logarithmic scale for this one. So this is the 10-year minus the 3 months Treasury yield, and my recession indicator. Sorry, it's supposed to be on the daily. Is if it hits 1. Now, for that to hit 1, you would need the 10-year probably to go to like 5%, 5.2% or something like that. And right now it looks like it's doing the opposite. It actually looks like it's forming a head and shoulders. And last time it formed some form of head and shoulders, it went down. So in English, the recession could be delayed. Reason being, people are actually buying treasuries instead of selling them. So people are trusting Trump with his, this government decisions, and they're actually buying the treasury. So when and if will the narrative shift to the point where they stop buying treasuries, and then like that's when a full recession will come into play? I don't know. At this point in time, we're really still like we're holding zero. So zero usually that's like a indicator of it indicates that the recession is still in play. So like here, for example, where we were below zero for a long time, and then we touched zero, and then we rejected, and then we finally broke above it, and now we're like holding it as support. So we're normalizing. We're in this period of normalizing. Now, will for example, Trump be successful in pushing this down again towards the negatives and delay that recession further, kind of like how they did with Biden for 3-4 years? That'll be good, because then we actually might have a, like we just talked about, maybe we'll pump in April, and we might have a little alt season Q4. This month of April might be bullish. This is what I believe. This is what Ivan is looking forward to. And yeah, that would be nice. Again, will it be like an amazing alt season? No, I don't think so. The reason being is because the Treasury still the risk-free money yield is 4.2%. So most people, they're not going to be going crazy right now. Like we don't have like easy monetary policy where rich people can just like leverage nonstop, basically, for there to be like this what's Ivan was also mentioning this last week, where you have this wheel effect, I think it's called, where you basically have Bitcoin price rising. To take out a loan on Bitcoin is virtually free because it would be 0% interest rates.
Like a carry trade?
Yeah. It would be like a carry trade. Yeah. So like right now, they're like that doesn't exist, because if you want to take out a loan on Bitcoin, you have a pretty high interest. So you're still like iffy, how much leverage you can take for Bitcoin to keep rising in price for it to make sense. But when there was like zero interest rates in COVID, there was no risk. So people would just like, and they wouldn't just do it with Bitcoin. They would do this with everything. they would buy like Apple shares, and they would use their Apple shares as collateral to take out loan to buy more Apple shares, which they would again use as collateral to take out a loan. You know, and this would keep spinning and accumulate more and more money until at one point people were just like, holy shit, we made so much money. I think it's a good time to, you know, take profit and reverse the right. So
I was
that's
trading Apple back then for sure. I was doing okay on Apple.
yeah, anything, you know, even the people were doing it with Bitcoin, people were doing it with Ethereum. When you have 0% interest rates and you're able to do that, that's just like well, that's that flywheel. There we go, flywheel effect. That's what it's called, where the wheel just keeps spinning and spinning all the way until basically people just naturally think like, okay, we made pretty good money. We should now like start putting the money into our savings, you know, into our pockets. So at the moment, I don't see that happening. So like it will be a limited. We might delay a recession. We might get a pump. Maybe we'll if we look at price cycles to see like what's going to be the next target for Bitcoin, we can take a look at that. And this is probably going to be the end of my analysis, and then we could start talking about everything else that you want to talk about. But basically, the pi cycle, we need to break green, and then we would go. Next target would be red. So currently, our target right now is $122,000 for one Bitcoin. That's just for us to go back to green. Now it's nice because we touched orange. We're kind of holding orange, which is this nice support. It acted as support before. Now we're gonna go back to retesting green. Now will we? And we also have to retest this 111 because we always hug the 111.
Yeah.
In a bear, it acts as resistance, and in a bull, it acts as support. So we're kind of like we still have to retest the 111, which is at 95K, and then we really need to break that green for it to push higher and possibly even all the way up to purple, and then that could be like already like the top of the cycle if it happens. Hopefully, I think it will. I am leaning more towards it, but of course, like I said again, with the recessions, you never know how bad they're going to get. If you look at the S&P 500, like right now S&P 500 is not looking too good.
Yeah.
And if depending on how hard the S&P 500 starts dropping, everything else will follow. But
yeah, it's rare for it to stay under support like that for so long.
Yeah.
It has dipped below that level before, though. Yeah, like here.
Yeah.
2022, that was bottom of the bear.
Yep, exactly. So, and that was like basically a little recession. That was like nothing even crazy. That was just like we went from 4,800 to 3,600. But if we have something
Bitcoin's
like
never seen a large crisis. Like the last large crisis was when Bitcoin was born, like 2008, 2009, right?
Yeah, exactly. Yeah, if we
go
back there,
war talks ramping up and stuff right now.
Logarithm scales, but yeah, exactly. Like I mean, it really it tanked. The market tanked. I mean, we went from 1,500 all the way down to 600. So that would be equivalent of us going from 5,000 where we are now to like somewhere like 2,000. So like if a market starts crashing that bad, your Bitcoin is probably going to be also go crashing just as hard. So I don't think they're going to allow this. When the flow, like this is the reverse flywheel. This is where I mentioned like they're going to turn on the printers. Basically, what's going to happen is going to be a reverse flywheel. The stocks are going to keep going down. Then the people who are leveraged, they have to close their positions, so they have to sell their money to close their leverage. Then it keeps going down even more. Then that those people will stop eventually. And then if the printers don't turn on at this point in time, then you'll have actually companies shutting down, closing doors because they're not going to be able to take out loans anymore to fund their operations. I think like S&P 500 has like a huge amount of companies that are solely in business because they can take out a loan and just refinance that loan. They're not even looking to pay off that loan. Their whole plan is to keep in operation by refinancing loans. So if you have like all those companies now closing shop, those people lose their jobs. Now, since people are losing their jobs, they're reliant on unemployment. Nobody's going to be buying Shiba Inu at that, at a time like that. So they would turn on the printers probably very quickly once if we start crashing. My guess is probably like around 3,000. If we start seeing like S&P 500 hit the 3,000 levels, at this point you probably already have like some kind of a bottom in for the recession, and the QE would turn on, printers would turn on, everything, and then at that point probably when Bitcoin will start like ripping towards
yeah. Apparently, Bitcoin likes a recession. Do you hold S&P 500?
No, I don't. I could show you my stocks. I do have a portfolio.
I have a little Nasdaq actually.
Wow. So I have my own little portfolio that I made like 4 years ago.
Charles Schwab, yeah.
I use Charles Schwab.
So you're holding all these?
Yeah, and my biggest holdings are these three. So Palantir,
cool.
Alibaba, and Apple.
What does Palantir do?
So Palantir, they're basically an AI tool for the government. Okay. and for business. It's pretty nice. I started buying them when they were like $6, $6 to $20 a share. They went up all the way until like $120. I sold around like 105, but I still hold a lot of it because I never usually sell. But yeah, like I was buying it at these prices long time ago.
That's your trade there, the red and green?
No, that's just my long term. Okay. My price of it is like $16 a share.
Yeah.
Current price at least. Yeah, but I was like averaging down. I remember I was buying it like when it was like $30, and I was averaging down when it was like $10, something like that. So my average price ended up being like $16 a share, and it had a really nice rally. These guys, they produce machine learning tools for the government where they will like come in. It's actually interesting because Elon Musk could technically use these guys. They already have heavy contracts with the government, and he could use Palantir to find all the inefficiencies that they're looking for. This would be the company that would easily be able to facilitate that. Like, okay, this is all the inefficiency spending that we
is it like a competitor to XAI at all, or?
Well, Palantir is on a whole different level. I mean, they're like these guys. Like, you don't even know what they were. And,
I've seen a lot of people posting it and people asking like, what do they even do and stuff. So I just thought I'd ask that question here just to kind of reiterate that question, right?
Yeah, exactly. Yeah. So it's like it's a company that's still not a lot of people know what they're doing, but in the background, their CEO Alex Karp, the crazy looking Einstein guy. Yeah, this dude right here. He sells a lot. Like if you look at finviz.com, and I mean, this guy's caking it down there. Like if you look at how much they sell, like look at this. Where is he? Alex Karp. I guess he hasn't sold recently. Oh yeah, there we go. Alexander Karp. He sold 600,000 shares for $59 million on February 20th. You think like it's a bear market? No, not for these guys. These guys are living the American dream.
They're selling shares of their own company, or
of their own company. Yeah, he's selling shares of
cashing in.
Cashing out. And look, it's only been like nobody even buys. They're just selling.
But the chart didn't look too bad as a result.
No, that's what I'm saying. Like, this guy knows that he's gonna like the tool that he has is only gonna make him money, so he's just cashing it out like without even thinking twice. Like he's just taking profits nonstop, but growing his own bank account, knowing for the fact that basically he's building the tool for the AI for the government. Basically, he's building like the ultimate ChatGPT for the government. And they have two products, so Palantir. Gotham, I think, is one of their products. So they have demos you could check out. Let me see if maybe they have some sneak peeks on their website.
Your software is the weapons system, it said?
Yeah, it really. I wouldn't be surprised. They have probably military contracts where they take in all the data from like drones and everything. Yep.
This is how you get Skynet.
This is Skynet, basically. This is kind of, it's deep.
Your internet's cutting out a little bit there.
Oh, is it still bad?
It's good now.
Okay, cool. Yeah. So these guys have all this, like, they have military contracts. I mean, like, this is crazy shit, right? So the AI-driven combat superiority, like these guys are heavily in the government. And the contracts that they have, like, I think, like, last time I was watching his I think it's called like a shareholders briefing. He was saying how they like secure easily. They'll go do a demo, and every demo that they do, they secure like $15 million contracts. So it means it must be amazing. Like it can't just be like you go to a demo and all of a sudden, somebody just gives you $50 million for no reason. So these guys' tool works. They show you comparison charts of companies that use them and companies that don't use them, and the companies that do use them, their like production and productivity, it goes like through the roof. So it's yeah. So the government is using AI, and that's why I started
$86 a share.
Yeah.
What are the options contracts like on that? Like if you sold one or two options contracts, is it pretty good volume? Do you do any of that?
I haven't checked there. So I remember I had a tool for options. I forgot what it was called. It was like oh my god, what was it called? These are my crypto stuff. DeFi Llama.
Yeah, it's hard to like pull it off the top of your head, but I was just curious about what the options look like in comparison to MicroStrategy and Tesla, for example.
Yeah, let me see the spreads. Okay, maybe with Yahoo
Options
Finance
chain or something, maybe, I don't know.
Yeah, there was this awesome site before I had that. Oh my god, why can't I accept any of this? Cool. Yeah. So yeah, with options it's going to be a little bit hard to understand, but what you'll be looking at is you don't want crazy implied volatility. You want something like under 100%. But implied volatility is also where you make like the craziest money. So as a trader in option trading, you have what like the degens do. They would go for end of day expiring options, and they would just buy those. Those would have like the craziest, highest implied volatility, and they either go to zero or make you a lot of money. So if you're a degen trader, I don't usually touch that stuff because it's like buying like new meme coins.
So the invest answers strategy is to sell options that are slightly above in the money, and then they're like 6 to 8 weeks out. That's his strategy. I had some success with it, but you have to do it on spikes. Like you can't just do it anywhere. You have to wait until the price spikes. So that means you're not buying it the same day, because then you're buying at a high premium. So you have to sort of get into the position when it's low, wait for the spike, and then sell the option 6 to 8 weeks out, something like that.
So 6
and then that way, even if you get exercised, you're still locking at profit as well.
Right. All right, so let's say so then you'll be looking at like May.
I guess you could buy it on a spike though, because you're still selling the option above the price that you bought it for, and you're collecting the premium. So it's kind of a winning strategy, I guess. But the only downside is if the stock continues to go up, then you're missing out on that upside, right?
Yeah. So you would be selling puts, I think, if I'm not mistaken.
I've only sold calls before. I haven't sold puts yet.
So okay, so you're selling calls. Okay, yeah. I also get confused with them. Okay, so you're selling calls, and you're locking
uncovered calls, right? So you already own the stock, and then you're selling the right for someone else to buy it at the strike price from you, but not the obligation.
They don't even have like a premium. You collect the
promising
premium
to buy the stock at the strike price on the strike date, something like that.
Yeah.
I'm not very good with puts. I haven't done a lot of put action.
You're collecting the premium, so I'm guessing you're selling. So you're saying the price of it is not going to go below what it is now.
Yeah, say we sold a call at the strike price $88 or $90 for what's today, April. So say May 15th, something like that. Strike price $90.
Oh wait, I think I went so far.
And then how much would the premium be essentially?
Yeah, and you just go, and then and you're saying it's not gonna go above that price, so you're like, you're
Well,
collecting
even
that
if it
premium, right?
does exercise, you have two options, right? You can buy the option contract back and sell another one. So you're buying it back for more money, but then you're selling another one and collecting a larger premium if you want to roll it like that. Or you can just let it exercise and then you're keeping the premium and you're exercising at a price higher than you purchased it for, right?
Nice, nice, nice.
Yeah.
Yeah, exactly. Yeah, you're basically, yeah, I didn't do the second one, but I am familiar with this first part where you're just keeping the premium,
I
and then
kind of
you
got
can
screwed
just,
over on the rolling method because MicroStrategy kept going up and I kept buying it back for more and like rolling it out further and further. And eventually I was at this, I was rolling out like 1 or 2 years into the future and I was collecting this huge premium, but I just felt like I was leaving so much on the table that I ended up buying it back and then not keeping the premium. So I ended up like losing out on all that upside while I was rolling it. Like the stock price went up $100, and meanwhile at the end of the day I ended up with the exact same amount of money I had before. So that's the risk with rolling, is you don't want to get into positions that you're not comfortable actually holding. So if you are like buying back and rolling, make sure that, for me it was more of like an experiment, and so I learned what not to do, and so I left a little bit on the table in that process, but I'm a better options trader as a result, right?
yeah, yeah. Yeah, there was also like I say I couldn't find, I don't know if I bookmarked it. There's this site that basically shows you the difference between the puts and the calls, and like a strategy that the person was using. I saw it on TikTok. She basically saw if a company has more puts than calls, she would pick the opposite. So she would see that people are heavily shorting the stock, then
Yeah,
she would buy calls on it, or
yeah,
vice
because
versa.
85% of options contracts expire worthless, so you can decide if you want to be the house or if you want to be the gambler, right?
Yeah.
So yeah,
Yes.
selling the covered call is like you are the casino, and so you're more likely to win 85% of the time, essentially.
Yeah, yeah, yeah. So I use when I do this, before I did it on Robinhood, but now I canceled my Robinhood account. So
Yeah,
I would do this on Schwab. But basically, you're looking at these spreads right here. I wouldn't even know how. So you're saying your date
68
of
weeks out,
expiration is
so May 16th, yeah,
May 16th,
and then look
and
for 90 bucks,
you're looking
strike
for
90.
$90. But why does it say 4215? What is this? That's, oh, last trade. Okay, you don't even have to worry about that. Okay. Okay, so you have 83% implied
So
volatility.
$8, so 8 times 100, so you'd be collecting a premium of $800.
Okay, yeah, okay, I see, I see. So you have to have 100 shares of
Yeah,
Palantir. Once
yeah,
you have 100 shares, so 100 shares of Palantir is already like a good
like
amount of money.
nine
That's
grand or something, 8 grand,
yeah,
eight and a
eight.
half grand.
So like yeah, so like 9 grand you have to have, and you're only collecting
That's pretty
800
nice. Yeah,
dollars.
you could collect $800. Yeah, that wouldn't be too bad actually.
And then if it never reaches this price, your contract just gets expired, and you're collecting the $800. If it does reach this price, then the
PLTR,
guy,
Palantir. But yeah, you'd want to wait until it has
yeah,
a, a spike, right?
yeah. And what you could also do is, like, let's say the price is increasing, you can then probably close out your option by buying it back, and
Yeah, if
it
you want to roll it, yeah.
and you would just get the difference between the whatever you got in the premium to whatever you bought it back.
So this would have been a, like on my screen here, this would have been a good spike to sell a covered call right there.
Nice. Yep. Yep.
But right here, it's not as good of a spike to be selling a covered call.
Yep. Yep.
Yeah.
Cool. All right. Let's see. We also have some comments here. I wasn't. We're doing a lot of. My bad. Let me stop sharing, Chris. So we have Burbs here. Interest rates will plummet with the recession too. I'm all black swaned out. Okay. Okay. Um, so yeah, interest rates will plummet with. So the reason why interest rates will plummet with a recession is because they need to do quantitative easing to get out of a recession. Thus, they have to lower the short-term interest rates, and by lowering the short-term interest rates, basically people will will take out loans on the short-term interest rates because it makes sense for them to do what I was mentioning earlier, how you can take out loans and not have any repercussions because you're paying virtually, you get free money. And since nobody is going to be buying long-term interest rates at that point, those interest rates will also start falling down because people are going to be selling more of them than buying and selling. But wait, sorry, the other way around. Okay, hold on, wait, that didn't make sense. So the long-term interest rates will have to be also purchased. So it's interesting, right? So these are very complex systems. You have like what's called short-term interest rates, people that lock up their money for like 3 months to a year. And then you have long-term interest rates, people that lock up their money from 5 to 10 years. And those give you a coupon. They give you some kind of incentive for you to lock up the funds. Now, in a recession, the Fed drives down the short-term interest rates to 0. So they're telling you like, hey, we give you 0 incentive to invest in us. Like literally 0. You're locking up your money to the government and you're not getting any but basically no return from giving them funds to the government. Some reason people do this. Okay, this is where the complexity. There's a big complex system that I don't know why people do this. If I had to guess, it's not people doing it. It's the government forcing the central banks to do it. Like the only people that are buying those loans are probably the central banks. I wouldn't buy those loans. Like if you give me a loan and you're telling me, or like if you offer me a loan and you're saying like, hey, let me borrow $100 and in like a year I'll just give you back that $100, I'll be like, what's the point? You know?
Yeah.
Why would I give you $100 and I don't make anything out of it? So same thing with long-term interest rates. So for the long-term interest rates to come down in a recession, usually that means that people will have to actually start buying long-term rates like mad lads. And by doing so, they will push the price up of the bonds and that will push the interest rates down. So that makes sense actually. So yeah, okay. So just to summarize, so recession comes, Fed lowers short-term interest rates to 0. Nobody wants to buy short-term interest rates because they don't give any yield. They then buy long-term interest rates because that's where they can get the yield, thereby pushing those prices up and pushing that yield down as well. Yeah, we solved it. So yeah, that's how. But a recession does have to happen for that. So.
Yeah, Burb says banks selling stuff, loans to or bad loans to people in form of 401ks. Yep, exactly. Feed the economy. Justin wanted to jump on here, but I kind of have to go in the next sort of like 5 minutes here. I don't know if Justin can get on fast enough to say goodbye with us. He wanted us to explain options. I don't know if I'm like the best person to explain options. I have sort of a basic understanding, but there is like lots of great YouTube videos that you can watch that will explain the basics of options.
Yeah, options is a very like complicated thing. They have all these Greek variables that all play a role. And like I said, if you're a degen option trader, then you're just looking to gamble. Mostly people just buy the end of day expiring options, where it's like Tesla, for example. Boom, we have tariffs right now coming in. Tesla is a very highly option traded, volatile traded stock. You go in there. Are you bullish, bearish today on Tesla? You pick a side, and then you just buy those expiring options. And then before 4 o'clock, you see what you make. If you were correct and the price dropped, you made some money. You close your position. Boom. If you're incorrect, then your option went to 0.
I've thought about that strategy too. Like, buying calls and then selling them when they're worth more. Like, not actually even owning the stock, but only just trading the options themselves and never getting exercised. Welcome, Wizard, to the stage.
Hi, thanks. Good to be here.
Nice.
The KOL Bear Report, you've even got a background for it and everything. We're brainstorming.
Yeah. No more bearish news. That was it.
Yeah, I'm trying to make a new background right now, actually, as we speak.
How you been, Rom? What you been up to?
Good. Honestly, I'm trying to get this meme coin project launched, but I've been having so many bugs. I'm gonna go straight back to debugging right after the stream. But I could sneak peek show you guys what it looks like.
Yeah.
While Theo's here.
I could probably do another 5 minutes here if you want to do a live demo. That's fine.
it's just not, yeah, it's not the craziest demo, but I have my code right here. And where's my site? Oh, I need to start it. I'm just having build errors into this. Can't see
So
this.
here we
Okay,
got your VS Studio.
yeah. Just disregard that. Hopefully it loads. Oh shit, yeah. There's errors. This is one of the errors. I don't know what's going
Are you
on.
using
But,
Cursor?
I'm using just simple Next.js, and for some reason my styling is not working. Let me open my other project so I could show you guys, because I had to rebuild it. Basically, what I did was I rebuilt the whole project. And did I save everything here? And
You're not
after I rebuilt it, it's still giving
using a
problems.
launchpad. You want your own custom meme coin that is launched a different way.
Yeah. So like, so my theory with the meme coins, here, I'm sorry. Where can I?
Was it snowing in where you're located today, Theo?
Oh, absolutely.
Oh, okay, there we go.
Canada.
So you can, so this is the first iteration of the site. Now, everything works here. The other one is the one that's giving me issues. Give it a second. Let it work. Boom. Okay. So I had a pretty simple, like the whole plan was, all the meme coins were on Solana. And my idea is like, how can we make Ethereum fun again? How can we make Ethereum cool to use? So the plan was create a meme coin. In our case, it was Charlie Bull. Deploy a little bit of liquidity somewhere. Doesn't have, pick a chain, pick any chain, deploy like $100 of Charlie, and that would be like, my tokenomics is 50%. So like I would take the liquidity pools. Let's say I'm making a million Charlie coins. I'll take 500,000 Charlie coins and deploy them on Avalanche for $100. From there, now you could have like Theo come in and be like, okay, you know what? I'll put $1 in and I'll get some Charlie tokens.
Yeah.
So you put $1 in, you get a good amount of Charlie tokens because you're like the first buyer. So you get, I don't know, yeah, you get like something like 5 million Charlie tokens. And now what you can do is, so like the mission would be, like help Charlie spread across Ethereum, right? Like, so like a virus, like help him conquer all chains. So that's where like the roadmap that's coming up. I still didn't need to
cross
update
chain.
it. Yeah, like, so like I want to like help spread Charlie across all chains. So what you would do is you would take your 5 million Charlie, you would then go to Arbitrum, and since this contract is already a multi-chain contract, you would just go to like the Arbitrum Trader Joe DEX, and then you're creating a liquidity pool. So you take like 1 million out of your 5 million Charlie tokens, and let's say you also put $100. So now there's like, there's going to be arbitrage where you'll have a lot of
good.
Yeah, so like the community just like puts whatever money they have in. Like initially we're starting with small things, but we're all invested. We're all utilizing Ethereum in a fun way where we're helping Charlie basically grow on all different mainnets across Ethereum. And then from there, hopefully the idea is, now you have people that are backing the project. We're helping Charlie grow. And by doing so, you're more incentivized to share the project. You're telling other people like, hey, this is going to be the next biggest thing on Ethereum. We're trying to conquer all the chains.
It's unique.
Yeah.
Because
help out.
Because you get like other memes are on one chain most of the time, and they don't launch as a cross-chain token. So this is unique, right? Because it would be from the logos, like on very many cool chains. You know what I mean?
Exactly. Yeah. So it's like this cross-chain AI pop. AI. The AI part is my next thing that I want to build before I launch everything. Is I want to have a Twitter robot that communicates with people. In terms of, like, you could ask Charlie like, hey, tweet at him. He'll reply back to you. So that's another step in the project that I would want to solidify, just so it could be more interactive. And then putting those three things together, so you have
an agent tweeting back at you, tweeting back at people. Charlie's an agent on Twitter, on X.
Exactly. Yeah. Yep. So Charlie is like a. Yep.
Yeah. Okay.
So
I'm just looking at like Theo saying he has to leave, and I'm just
Yeah,
thinking,
guys,
okay,
I do kind of have to get running. I have an appointment that starts in a half an hour, and I still have to drive there, so we might have to wrap it up here. Any final thoughts
Sure.
from you guys? Maybe RomReactor first.
Yeah. So just to summarize, awesome things coming along from my side. So this meme coin is something that I do hope to launch in April. In terms of market summary, DCA, guys, that's probably the best thing you can do at this time. You know, if you don't have the patience, then just wait for that production cost at like 65 to 70K.
That's interesting perspective. I think that a lot of Bears got wrecked today. That's interesting. But whether that's going to continue, I think Bears are going to do quite well over the next few months. Okay, cool. We'll debate it another time. See you, Rom.
Okay.
Yeah,
Thanks so much, everybody.
Maybe Friday. We'll do Friday.
Yeah, let's do it.
Hey, guys.
That'd be great.
Okay,
That'd be great.
Let's do it. Peace.
Bye.